Hey guys, welcome back. DripCoach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. In today's video, we are going to talk about this image here. Stop selling your Bitcoin to MicroStrategy and BlackRock, and how many of these small wallet holders are actually just feeding the whales. So stay tuned. All right, so this comes from Bitcoin Magazine, but it also is right on the heels of the Bitcoin mining panel that was done 7 days ago, hosted by Anthony Scaramucci, and had the CEOs from BitDigital, Bitfarms, CleanSpark, and Core Scientific. And there's going to be a clip in here I'm going to play from Fred Thiel, CEO of Marathon Digital, where he's talking about Bitcoin being a national security and how essentially, like, it sounds the way he says it, that it's kind of just about maintaining dominance, but underneath all of that, you'll understand that it's all about control. And he even alludes to the same way essentially they have controlled the gold market. So the importance of this, before I play this clip, is understanding that the platform, Drip to BTC, or the high yield Bitcoin generating wallet, all underneath Digital Crypto Solutions, allows for the small Bitcoin holders to basically accumulate more Bitcoin and not sell it to those entities, because at the end of the day, there's only so much Bitcoin available, and ultimately they want to stack as much of it as possible so they can indeed control the flow and the price. And unfortunately, most people are out there right now just looking at the short-term price action, trying to catch a pump, sell for a couple. They're not, and they're really chasing the meme coins. But with Bitcoin, they don't really see it as this asset to accumulate and store financial wealth long-term and accumulate that financial energy. So those that are accumulating it are just kind of swing trading it, or again, taking small profits. And who's continuing to buy in the background? Those bigger industries, entities, central banks, things of that nature. So let's play this clip and then we'll look at some of the actual stats.
By far most important thing, other than Bitcoin, is a national security concern for this country. Russia is the world's second largest Bitcoin mining nation. Countries that operate on a Bitcoin standard from a perspective of transacting and holding Bitcoin can transact outside of the sanctions environment. They can transact outside of government controls. If the US does not have a substantial amount of Bitcoin mining onshore, they can be locked out, and US companies can be locked out of transacting their Bitcoin. So strategic ownership of block space is of a national security concern. And that's why with 40% of global Bitcoin mining in the US must maintain dominance, not just in Bitcoin mining, but also in the holding of Bitcoin assets in US companies, whether they're ETFs, whether they're Bitcoin mining companies, whether it's MicroStrategy. But the US must maintain dominance, because by the same reason the US holds 40% of the gold reserves in the world, they can exert influence in financial markets. They have to do that as the world transitions to digital currencies.
Okay, it's incredibly,
Like he just said, exert influence in the world. And he was talking again from the idea of the mining side, but also, like he said, holding Bitcoin. So it's a double-edged sword. If they can control the mining, or you can't control it because it is decentralized and it's all over, but having a larger slice of that pie, then you can influence to some degree. And as you can see from this chart already, you got Bitcoin with, like he said, almost 40%, China with 21%, and Kazakhstan with 13%, then Canada. Now, the good thing is like none of these will ever sit on the same agreement of what to do with Bitcoin. Like, it's kind of like gold again, right? So China's definitely not going to sell their Bitcoin to the United States. United States is not going to sell it to China. And maybe Russia and China might, work something out or whatever. But the point that you're seeing is that it's already spread out enough the mining side, but the actual Bitcoin that's in circulation, that is still available to be traded. And according to the Bitcoin rich list on BitInfo charts, you can see here that the majority of the total is going to be right here. Can we highlight that? Between the, no, we can't. So the one all the way up until 10,000 range, that makes up 24, 44, 66, 76, 81. That makes up 81% in that range. And there's already 19 million in circulation. So depending on who these people are, it could end up shifting all the way to these people. Like, we have to definitely know these are serious whales and entities for sure. They could be some OGs way back in the day that stacked some sats and got it early. But if any of these people, let's say they did get it early, start to sell, who do we know is going to be the ones accumulating? It's going to be your BlackRocks, your MicroStrategies, your central banks, or whatever countries are deciding to put it on their balance sheet. And then by doing that, they are holding it and you will not get a chance to buy it. So you need to find a way to get into it now and be able to continually, slowly accumulate. And that's again where the digital crypto solutions, white label, high yield Bitcoin wallet applications come in, because you're able to put in a very small amount. And then by buying credits on discounts, you're able to actually slowly accumulate more and more of that Bitcoin. And hopefully you don't sell it to these entities and feed MicroStrategy and BlackRock, because you will see and understand the value of this asset long term. And we can look at some of these other charts and you can see, let's start with the smallest. You can see that Bitcoin address accumulation in the smaller amounts has definitely increased. So it's sitting over 12 million users now have at least 0.01 BTC. And we go all the way up to 0.1, and that's sitting over 4 million. So definitely people are accumulating, which is great. It's getting more and more decentralized. The more wallets you have holding it, the better it is for Bitcoin. But think about this. The vast majority of Bitcoin is held by a small group of wallets, like I was showing you before. So if the trend continues, Bitcoin designed as a tool for financial freedom, then it could become as centralized as today's financial system if people continue to sell, these small wallet holders continue to sell out to the bigger bag holders. But as I mentioned, the solution is to not feed the whales, don't give them more control, and instead hold your Bitcoin and use platforms like this to dollar cost average and continue to stack sats. It may be slow, but it is a guaranteed way to stay in the game. And then again, as Raoul Pal said, don't fuck this up. So you can still take 10% of your risk capital or whatever and go play DGen and some of these other assets, but do not sell your Bitcoin. Even he said in his new thesis about what he plans on doing in the next cycle is don't try to time the top. Don't even try to take profits, because what happens inevitably, the psychology of the investor is, let's say you're buying in here at 60 and you get super lucky and you sell at a 4x, you sell at 250. The chances are you will not put back in as much as you had and had taken out for profits when it course corrects again, which means you will have less Bitcoin going into the future when it goes back up above those price ranges where you took profits. So the idea behind taking profits is smart, but if you don't have a solid strategy and you're not actually kind of financial management savvy, then you'll take those profits and you'll go spend them on something else, go buy some toys, take a vacation, which is fine. Like he calls them lifestyle chips. You should do that. But the likelihood of you putting back in what you'd accumulated is a lot less. Whereas if you just continue to let it ride and dollar cost average, no matter what, or at least during the bear market, then you'll end up with more Bitcoin over time. And that's the way to play the game. So hopefully this gave you some insight so you can see what people are doing. And even again, out of their mouth, these are big time CEOs. Of course, BlackRock is not on this panel, but you can hear the fear, so to speak. And if these guys are publicly discussing this, you got to imagine definitely behind closed doors, these individuals are discussing that as well. BlackRock getting their ETF approved, the ETH ETF approved, that was not by happenstance. It's because they understand that digital currencies are here, digital assets are here, and they want to be sure they don't miss out on this opportunity and that they can continue to control the narrative as they always have. So you watching this content are hopefully one of the smart and savvy ones and understanding where this will go, and you'll be able to take advantage of it in this cycle. All right. Hope that provides value. If it did, smash that HBO special, help a brother out, like, subscribe, comment down below. Until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? SPRITZ Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.